Hey everyone, this is Steve Lachance with Maine Real Estate Today, and I'm here with my co-host Hailey Lebel. Hailey, tell them about some exciting news that has happened recently with you.
So I recently made a really exciting brokerage switch. I was previously at Realty One Group Compass, and I just felt like I needed a change, new year, fresh start, all the great things. So I am actually now with Hearth Key Realty. We're a brand new brokerage, and we are located in Auburn, right in the TJ Maxx, Planet Fitness, flagship Cinema Plaza. So really prime location.
That's easy. Yeah, that's great. Congratulations
I love
on
it. It's awesome. I have my own office space there, decorating it. It's beautiful. It's
Isn't
cozy.
The fun part, though? You get to make something all yours.
My client chairs are so comfy, so all my clients will probably not want to leave.
That's great. I made a move a few years ago myself, and it's always awkward when I'm in sales that to say, I'm at the best company in the world, use me, and then suddenly you're changing. But in an adapting environment where the market has shifted, being at a certain company is great, and then you suddenly realize, whoa, the market has shifted drastically, and perhaps this company isn't giving me what I need. So I made the move to go to Integrity Mortgage, and the tactical reason for that was that they had local banks that they work with as well. So it's so terrible I've used this analogy before, so if you've heard this before, I apologize, but if you go to a Chevy car dealership and you ask them, what's the best car in the world? What do you think they're going to recommend? Probably a Chevy. And to be fair, so would Ford and all the others. So the reality is what's going to happen there is you're basically talking to a salesperson that's working out of one box of products. So when I made this transition, I remember how amazing it was to not say, well, here's what I offer. Like, well, here's what I offer. Here's what the bank down the road offers too. And frankly, their rate is a little bit better today. So I think I should lock you in with them. And most lenders don't do that.
No.
We can.
And it's really important that you can, because it allows that flexibility that a lot of lenders might not have. When it comes to that client who finds that house that isn't, your cookie cutter house, where it can't just finance super easily, where you have the resources to go ahead and help them still. Well,
correct me if I'm wrong, because you're an amazing listing agent too, not just work with buyers, but you can sell property. Well, it's not bragging if it's true, right? But where I'm going with this is, as a listing agent, I've always heard that you got to be, your loan officer or your lender needs to be local.
Yeah, they definitely do. And, and the big reason is because when it comes to your lenders who are way out of state, they can be harder to get a hold of. And when it comes to a local lender, my experience with local lenders is just that they are a lot more apt to be available nights, weekends, random hours.
Not a 9 to 5 business.
And the response time is so much faster. And in the market that we've been in and are still in when it comes to competition, you really need that quick communication, because part of your offer does include a financing piece. And in that financing piece, as a real estate agent, I do need to know the buyer's information in terms of what is the loan type, how many years are you financing for, what's the down payment, what's the interest rate, what are the closing costs that they need the seller to cover, if any. And as a listing agent, I need to be able to advise my seller and let them know what all of these financing types mean and what all these contingencies are in that financing piece. So it's really crucial to have somebody who is going to be available for all of the questions and explain things to the buyer, as well as be around to make it more specific to the property when needed. Right,
because I'm sure you've had it happen even when somebody is approved with local lenders, like a local bank. I don't want to pick on banks and credit unions, quite frankly. I have some awesome ones I use as partners, but they get me when it's 9 o'clock at night on a Saturday and someone's saying, I need to know this. Can we switch to this? Can we make this change? Is it okay if we do this instead of that? Your bank's not going to be able to do that 9 o'clock on a Saturday.
They have their set hours, typically is what I find. And when you find a good lender in a bank, they give you their cell phone number, and they do answer on the weekend. So I do have a handful of lenders at banks that I do like and prefer to send my clients to if we need to go the bank route. But the local lenders is really just, they're typically faster, and they're just always there when you need them.
Yeah, and I have my favorite banks, because as we can broker to other lenders as well, one of my favorite things when we looked at Fannie Mae and Freddie Mac, in fact, right now I hear there's going to be more adjustments, but second homes, investment properties, we're seeing what's called loan level pricing adjustments to both the interest rate or the price of the interest rate. On the secondary market, there are hundreds of lenders that can do them, but sometimes the local banks are not charging all those extra points you're seeing for those properties, and that's a huge difference in cost.
It is, and that's why you should also look around for your lender too and see, they might have a low rate, but what do you have to do? What do you have to do to get that rate?
Yeah.
Are you paying down points? Are you putting more money into that closing cost pot to get that rate? Because if you are, is that benefiting you? And if it is, then great, but you've got to know it.
Yeah, and that's my shameless plug that I always put in it with Integrity Mortgage, because as you mentioned, that you should shop around. Well, that's what we're going to do for you. So I'm not limited to just, here's my box of products.
Yeah.
If I can't do it or my interest rate's not that great, I have other banks and lenders locally and nationally that we can do them through.
Yep.
So it's a win-win.
And now, just to kind of pick your brain for the consumers who are listening to us, when it comes to you brokering out those loan types to other lenders, are you still in that same line of communication for the client who was with you at first?
Absolutely. Yeah, I want to be the conduit between the bank and myself. One of the great things and the downside to it is when a lot of lenders broker a loan, they're submitting or giving up control and sending it to that bank, and then the bank's got full control over it. We don't like that here at Integrity. So we've partnered with banks that think alike, that have contracts with us, that understand that if you were to just go there directly yourself, they're not going to get the same price. It's not going to be as good as what we can give them, because we give that bank deals in volume. The individual customer going in is good for them. In fact, it's better for them because they make more money from you. But we don't want that to happen. In our case, we want to make sure that we're taking good care of the customer. The cost of this is not coming from the customer. We actually have contracts where we reduce what we're going to collect so that the customer is not feeling any of that difference of being brokered to them. And we get wholesale pricing out of it at the same time. So everybody wins in these scenarios, but we absolutely want to retain control. I want everyone to be able to call me when that 9 o'clock at night is a problem.
Well, and that's awesome, because I get a lot of consumers who have their preferred lender, or they just love whoever referred to them, and going with somebody else scares them because they've built the trust.
Of course.
And trust is so important when you build it, because you don't want to steer somebody wrong. And when they trust you, they want to stay with you because they know that you have their best intention at heart. So I think that's really awesome that you still stay involved.
Well, I had an insurance person I used forever. Real nice guy, real good referral partner. I would send customers his way, and never really shopped my own insurance out until my wife said, we're going to shop this out. And holy cow, what a difference it was. And ironically, now I'm back with him again, because you continue to keep shopping it out. I found now he's solid again. So it will change from time to time, which is why I like our formula, because I don't have to have that problem. If my pricing, because I deal with Fannie Mae, Freddie Mac, FHA, any of the other products, if they're not that great right now, well, what are the local banks doing? I'll talk to those guys and get their pricing for that customer.
And it comes down to when you have lenders, insurance brokers, real estate agents, they might be great in a certain market, but you want somebody who's going to be great in all markets and educate themselves to also bring you the knowledge so that you can succeed with that knowledge and make the right decisions for yourself.
That's right. That's right. So when you are listing a property and an offer comes in, help me understand this, because I, as a lender, I've heard many different takes on this, but as offers come in, I'm putting you on the spot here. We don't script this. This show is non-scripted. So when an offer comes in, are you really taking a hard look at the type of financing that buyer is doing? Does the seller really care?
Yes. And a big thing is because I'll give some examples. So for financing that we see most of the time, you're going to see USDA, VA, FHA, and conventional are the big top hitters. And VA is a veteran's loan. USDA is just only outside of the city is really all it is. I'm not looking for down payments as much as I am what is the loan type and what are the financing guidelines for that loan type. Because for FHA, VA, and USDA, flaking, peeling paint is a really huge hitter for your appraisals. Rotting wood, cracked windows, holes in the walls, cracks in the walls, sometimes in the ceiling, whereas conventional is easier to finance. So it depends if we have the multiple offers and we have that conventional offer and, it's up there where the price where the seller really wants, then great, but so it's a piece of it, but it's not the main piece of it.
Okay. So if you're new and you're listening to this for the first time or you haven't purchased or owned a home before, what we're basically saying here is that the type of financing, whether a seller knows any better or not, a listing agent's going to help advise based on the condition of the home. They can help analyze that if there's some strength to the buyer or if there's some weakness in that buyer's offer. And financing does make a difference. Although I tell you, I'll throw you a curveball here, where I've had, ever since COVID kicked in and when the market went crazy, which it's not as crazy now, but when it went crazy and everything was multiple offer situation, everyone felt or desperately needed to go with a conventional conforming, as much money down loan as you could to be competitive with all the other offers.
Well, I had a lot of first-time home buyers in this whole market here, and I found that to allow my buyers to compete on the same level as your conventional and or even cash sometimes was getting ahead of those issues.
Right.
Beforehand. So painting a deck, we'd tag team and paint the deck together.
We
would, get those things taken care of before the appraisal happened.
So you get out there with a paintbrush?
Yeah.
No
100% I
really?
have. Yes, I have. And,
Good for you.
it's making the deal close. And I'm very careful now where the buyer's going to help me. I'm not going to do it for you.
Right,
right. But I'm there to help you.
That's
from start to beginning. I do try. I really do. We've had a lot of fun. It's always ended up being fun painting a deck with a client.
I don't know if I could use that in the same. Okay, we'll go with that.
It does, and I think it's just my clients. We just become friends.
Okay.
So and I'm big on that. The relationship is key, and I get to know them on a very personal level to be able to help find them that perfect house.
For me, no job is too small to be subcontracted. So if I can pay somebody else to do it, it's not the highest and best use of my time. We're going to move on to that.
Yeah. And there are times where I'll say, look, realistically, we can, like, for example, the whole siding of a house, like, I'm not doing that.
Of course.
You can't do that. There's a timeline for it. So sometimes you got to hire out 100%. And we have. I won't do rotting wood. I won't replace anything. I'm not a contractor.
So circling back to what that you were just mentioning is there are times where homes need a little bit of work that in order to get financing in certain programs are going to be pickier on that, particularly the government finance programs. But the scaring and the part where most customers I talk to don't understand is, why is that such a big deal? I know that it has some flaking paint. I can paint the house. Not a big deal to me. And yet the bank is giving me a hard time with it. And it has to stem back to what happened back in 2008. A lot of deals fell apart, and we had to take a hard look back at why that was happening. And a lot of it was because buyers were getting into these low to no down payment programs with good intentions, and then life gets ahead of you. You're your first few weeks into the house, an unexpected repair comes from your car, nothing even to do with the house, or whatever the case may be. A few hours are cut back at work. So projects keep getting put off and off and off. Whereas someone who has the ability to put 20% down, and then perhaps the appraisal is not quite right, they can cut back a little bit on that down payment and have reserves to make repairs or just have emergency money.
It's very true. It really is. And I think the only finance issue that I have a problem with is the flaking, peeling paint. And the reason being is that we live in Maine, and it's just the hot and cold, the humidity to the dry, and it's like there are so many houses that have it, and they're great houses. It's just the deck. More often than not has the flaking, peeling paint. And but I actually do have a home buyer guide and a home seller guide where I do target all of the financing types and their loan guidelines to help my buyers get ahead of those, but also the sellers get ahead of them before they do list. Okay.
So going to go back again to another question, or the same question actually. So if I'm a buyer and you're on the listing side, for example, and my financing is FHA as an example. I'm not picking on any particular program, I'm just randomly selecting FHA. And you have other conventional buyers, correct me if I'm wrong, you are probably considering the conventional offers over the FHA
in terms of ease, it kind of depends. It depends on what else is in the offer, because your financing is only one piece of the offer, but we still have the offer amount, we still have the closing time frame, we still have the earnest money, we still have closing costs. Do they need them covered fully, half, what are all of those things? And it also depends on the seller's motivation and what's more appealing to them in terms of those things. And also, does the house have any financing issues? If it doesn't, then it doesn't matter. Really.
Good point. And I'll tell you why I kind of set you up with that, because here's what I'm seeing happening a lot. And don't get duped into this. Work with the right agent, work with Hailey, because what will happen is too many times agents are calling me saying, I'm not going to help them. I can't even do anything with them unless they get qualified for a conventional loan. Well, for one, that's a shame. And two, it doesn't have to be that way. There are too many times where I have buyers that come to me and they're very well qualified in Maine State housing, rural development, FHA, VA, and the listings or the buyer's agent even is saying, you got to get them into a conventional loan because the seller's just not going to accept those offers. And what's happening is we're getting those squeezed through. We're basically pounding that square peg into the round hole where yeah, I can get it done conventional, but it is so marginal if the wind blows
But
the wrong way.
is it also what's best for the client?
Not
and,
necessarily,
I had a conversation where I'm big on building rapport on the buy side because agents want to work with good agents all day long. We want to know that the person on the other side is going to carry their weight in the transaction, and it's going to be great. That's what you look for. So a big thing for me is making the phone calls, doing the work to build the rapport with other agents on the opposing side, like the listing agents, and that's gone a long way for me. But I also think it's really important to remember that, like, I've been asked by a listing agent if my buyers can switch from an FHA loan to conventional, and I said no. I was like, sure, they could qualify, but it's not what's best for them, and they don't want to. And it was in the loan type where we were meeting all of the potential appraisal issues already. So have an agent who's going to fight for you in your best interest, because conventional is great in terms of the ease of financing, but it's not always the better option for the buyer.
I helped one of your colleagues once. It was a property in Westbrook, and they were unable after, I don't remember how many, maybe 10 or so offers on different properties, going with VA, just getting shot down. And they came to me and said, can you go conventional on it? And I looked at it and I said, yeah, I could, again, make that square peg fit in the round hole. It is not in their best interest. Who's the listing agent? Let me call and explain that to them. And we did. I had the phone call with them, and I said, listen, you have a great offer coming across the table. Your first question is, can they go conventional? The answer is yes, they could. The house that they're buying from you might need some smidgen of work, and they have some vision of the things they want to do. So if we were to go with their VA loan, they don't have to put any money down. They're not going to need to ask you for anything because they can handle it. And they're not going to have to pay mortgage insurance. Tactically, it was such a better product for that client that, ironically, after I explained this all to the listing agent and he went back to the sellers, turns out the seller's a veteran. And the seller's like, let's do this.
That's awesome.
And we explained, you know what the other part is? A lot of this happens, and I'm sure you've heard this, and I disagree with this 100%. I think it's mismanaged, is the appraisals take forever, or they're way more strict.
No,
they don't have to. What ends up happening is sometimes if you're using an out-of-state lender, or I don't want to pick on a national lender because there's some great national ones, they just don't have a local presence. So what happens is when a loan comes in, you really have to get the appraisal ordered as a lender the first available moment you can to get that ball rolling and keep the contract online with the timeline. Most lenders and banks will outsource the underwriting for a government loan, and they are going to wait until they get an approval on that so they don't start costing money on that. We will pre-underwrite it. In-house, we'll have our own underwriters look at it, but we'll also order that appraisal day one, get it into the VA portal so that appraisal is ready to rock and roll. And I got to tell you, VA appraisers have a timeline. They're required to get that done in, and if they can't, VA will push it off to the next one.
I've also found that your appraisal has a lot more to do with your lender than it does your loan type. 100%, because there has been a time in this crazy hot market that we just got out of where it didn't matter how you were financing. Any appraisal was taking forever.
That's correct.
I remember there was one of my buyers. We were up against the clock to get them into a house before their landlord kicked them out to sell the rental, and we closed the day that they were supposed to be out in time, thank God. But I'm not even kidding you, Steve. I had to call about 30 appraisers to get somebody to go out there because nobody was accepting it. And that was what the market was like, just 2 years ago. So it wasn't and that wasn't a VA loan. That was an FHA loan. So
no, it's tough. And technically, I can't even call an appraiser and say, can you be the one to go out and do this? I can't. I can't have that coercion. There's an anti-coercion law. But there was a time where, and that was mostly volume. It was so crazy that the only way to do it is to say, listen, I can't choose you, but I can tell you that there's an appraisal order out there to all the appraisers in the panel. If you see it and you're interested in it, please pick it up, because nobody else will. And we saw bribery fees. I mean, there was some highway robbery fees that appraisers were coming back and saying, I want $1,500 to go do this appraisal. I'm like, are you kidding me? And what choice do we have?
You don't have one.
You don't have one. There's such a limited pool.
Because you're at the mercy of financing, and that's the hard part, is that you have to do it if you want the house. And that was definitely a hard hitter.
The good news is it's not like that anymore.
No, it's not.
We're not seeing that now.
And the problem was really, just to clarify, it's not an appraisal process. It's the fact that the market has been so hot and so busy, and we have a shortage of appraisers in the state of Maine.
We do.
So that's really the biggest reason why that happened, and it's nothing to do with, the appraisal process in any market at all.
There's an appraisal shortage across the country, in fact, but Maine in particular has been feeling the pain of that for a while, both on the volume that we have and the education requirements to become an appraiser in the state of Maine is brutal.
Yeah, it's a lot. But it's so much better now.
It really is.
It's so much better now.
So that's before we get on too hard on that topic, appraisal turn times have actually been terrific lately.
Yeah, we're buying a house, right now we're looking. So
cool.
We've gotten our financing terms down to as little as a 2-week closing with the appraisal. So that's been great. I mean, it's funny because even as a realtor in this market, we're still getting beat out by cash. So, we don't have an upper hand that the average consumer might think that we might have, where I'm creative, just like I am with all my buyers too, but creative only gets you so far sometimes.
So the last thing I'd like to talk about today before we wrap up is relationships. Now, this is a relationship business, and too often it's believed that you have to spread it around as much as possible. And I got to tell you, what's working the best in this environment and where we're headed now makes me so much happier, because in the last few years, relationships meant nothing. It's so busy. They don't, the loyalty factors and agents and loan officers working together didn't mean anything. It just all the volume you could possibly handle. It's getting back to grassroots now, where the relationship, it's a relationship business, always has been. And that's where we can start to, your team, when you hire a team, they're understanding each other's thoughts. They're able to fully understand what the real motive is behind this. And my goals and your goals are, this is not all about commission. Not that I don't need to make money. This is how we feed the kids. But for me, I don't want stress. I'm already a giant ball of stress. I don't want my clients to feel it. So we're going to you and I will take all the stress off their shoulders, but that's easier said than done. It can also be considered sort of a weakness, which is why we work together as a team. To getting it across the finish line. And here's what I'm getting at, before this starts to sound corny, and again, this is how we feed the kids. It's important to me this is my 27th year in the business. My first 3-4 years as a loan officer, I didn't get that. This is just like, get out of my way. I'm going to be top dog, and I don't care who I step on to get there.
See, it's funny because we were so opposite, because I dropped out of nursing school in 2019 to get my real estate license, and I've never regretted it for a day in my life. Because I had somehow convinced myself that the only way to help people, which is what I wanted to do, was to be a nurse. But as I was in nursing school, I was like, no, I don't want to know people when they're struggling, when they're super sad, going through shit. Tough shit. I want to know them when they're happy. I want to be able to support them and be a friend when they need me to be a friend. I want to be there through everything. I want to build a relationship.
It took me years to understand that, because I was young. I want to make money, and I'm watching people making 6 figures or more, and I want to be one of those people. And the only way to get there was to just blaze right through it and not worry about the details, don't worry about feelings, and hold on a second, because after about 3 years, the market shifted again, and like we're seeing now, no relationships. I had none, actually real, true, genuine, this realtor knows, this lender cares, he's going to call back at this time, he's not going to be golfing or fishing or whatever it is. And I didn't have that my first few years. So after maybe my third, maybe even to my 4th year, I started to have to build all over again. You start all over again and start really building trust and relationships and genuine trust, because there's also that fake trust, like, I'm the best and this is it. You've got to prove it. And this is where I like what we do, and what we do in Maine. A lot of us have solid working relationships. And customers can look back. You know how many times I've been to, like, I don't know, a hockey game or a baseball game, and sat to the person next to me, and they're like, what do you do for a living? And I'll lean over and say, what's your interest rate on your house? People are like, huh? How you doing on your rate? What do you mean? I don't know. I'm a loan officer, and we talk about rates. And so have you called your loan officer? I don't have a loan officer. People have realtors. They have insurance agents. They don't always have
financial advisors. They have car salesmen.
They do.
They go to.
They do. And a lot of them don't have a lender. They have their bank. That's different. Again, having your bank where you're doing your general banking. I'm talking about someone who's focused. Loan officers that do their job right. I take a very hard look at, when I close that loan, did I leave them in a better financial position?
Yeah.
My kids know when we go to the park,
That's
we
the
leave
goal.
it better than when we got there.
Yeah.
When I do someone's loan, I want them to look back 3 years later and go, huh, it was pretty good. I heard about this other thing. Why didn't he do that? Why didn't he offer me this? I don't want that. I want you to look back and go, yeah, he did right.
And that's really good because it all goes back to what we kind of touched on earlier, which is people remember how you make them feel.
Yeah.
And that's why I'm really big on bringing my clients in for that face-to-face conversation, because I need to get to know them to best serve them. They need to get to know me as well.
Yeah.
And figure out, am I the right fit? And I think I am most of the time. And there are some times where
are.
I'm not 100%. I'm not everybody's fit, and that's okay. But giving them the chance to get to know me too, which also just naturally builds the trust. I am who I am.
Yeah.
And that's not going to change. I'm going to show up as me, and you get what you get.
And that's why I like it, and that's why we do these non-scripted, because we really want it to come across as genuine. And before we get too sappy here, we both been doing this a while, so we understand these trends and changes too, and and the value of being able to take good care of clients so that we get that repeat business.
It's so important.
Can't do that one transaction. I'm never interested in the one transaction.
No.
If I've done it right, I'm getting repeat business.
Well, it's important, and it's honestly the best feeling when they come back.
Yeah.
It really is. It's like, okay, I did my job, I did it well, and they still love me.
You made this change, what we talked about earlier in the show. Remind us again where you are now.
I am now with Hearth Key Realty, and I'm super excited about it. So I'll be sharing more content myself on my social media pages as well with my new office space that is almost fully decorated. So
nice. Look forward to seeing you again on the show. Hailey's going to be a regular co-host of mine, and I'm very excited to announce that. So please stick around, watch other shows of ours. You'll see more of Hailey. Thank you.
Thank
Bye,
you.
guys.